Transactions involving revenue and expenses. Recall the owner's equity account. Owner's equity increases on the credit side and decreases on the debit side. Revenue increases owner's equity, so therefore revenue will increase on the credit side. It will decrease on the debit side, but very seldom do you use a debit revenue entry. Expenses decrease owner's equity, so therefore expenses will increase on the debit side. Very seldom will you have a credit entry to an expense account. Ashi repaired a bicycle for $100 cash. What two accounts are affected? Obviously cash and bicycle repairs. Cash is an asset account and bicycle repairs is a revenue account. Cash is increasing and revenue is increasing. Remember that revenue increases as owner's equity increases. Cash increases on the debit side and owner's equity increases on the credit side, which means that revenue will increase on the credit side. Ashi repaired a bicycle for her friend Aaliyah, who promised to pay her $50 in 2 weeks. The two accounts affected would be accounts receivable and bicycle repairs services. The accounts receivable is labeled so that you can remember who owes you the money. Accounts receivable is an asset account. Bicycle repair services is a revenue account. The asset is increasing and the revenue account is increasing. Assets increase on the debit side and revenue increases on the credit side. Remember that revenue is increasing owner's equity. Consider the transaction where Ayla pays Ashi for the debt that she owed for her bicycle repair. The two accounts affected are cash and accounts receivable. Notice that this is not revenue. The revenue has already been recorded when the service was provided. Cash is an asset account and accounts receivable is an asset account. Cash is increasing while the accounts receivable is decreasing. Cash increases on the debit side and accounts receivable, an asset account, decreases on the credit side. Now let's look at an expense transaction. Ashi advertised in her local newspaper and promised to pay the newspaper at the end of the month. The two accounts that are affected are advertising expense and accounts payable. The advertising expense is an expense account and the accounts payable is a liability account. Advertising expense is increasing, but remember that this will decrease owner's equity. The accounts payable account is also increasing. The advertising expense increases on the debit side. Remember, this is decreasing owner's equity, and accounts payable increases on the credit side.